Come across the term gross profit, not quite sure what it is, or you'd like further information, follow my video and I'll explain more. And for most business owners, you'd recognise that in a manufacturing environment. For you as your business, gross profit can have a massive impact on you and your business. Follow my video and I'll explain everything that you need to know as a small business owner in relation to gross profit. What is it? Gross profit is how much margin you make on a product. So in its most basic form is you would buy a product, sell a product, and whatever profit or loss that you made on that would be your gross profit or your gross loss. Easy. Not so easy for small business owners because sometimes you may make the product yourself. So that can involve factory costs, that can involve materials, that can involve labour, that can involve machineries and a whole load of other stuff for you to able to build that product. All them costs that I've just labelled are known as direct costs, and for most business owners you'd recognise that in a manufacturing environment. Now in our business world today, especially in the UK, we have a lot of service-based businesses. So if you've got a service-based business, I use my own as an accountant, my team are direct costs. Because for us to produce the service we need to do to you, the clients, I need team to be able to perform them services. Other examples in our industry are computer software, where we need software that syncs up to Companies House and HMRC. We've also got premises cost, because if they're sitting there working, they need somewhere to work and also to have client meetings. So when you're looking at your gross profit, you are looking at what costs are involved in for you to actually selling your product or your service. How is this calculated? It's calculated by taking all of your direct costs that I've just mentioned, and that could be whether you're a service or a product-based business, and dividing it by how much income you've earned. So if you take your direct costs and divide them by your total turnover, that will get to a percentage which is known as your gross profit percentage. So as gross profit, you can either calculate it as a percentage or you can calculate it as a monetary number. Ideally, you want to do both. Why is this important? This is important because this is going to determine how much money you are going to make as a business. Stop. Now, I get that you have to make sure that you have to give immense value to your customers, yeah? That's a separate topic that's not for now. But financially, how much money you make in gross profit is normally the sign of whether a business is going to do really well, average, or even poor. Because a lot of the business's costs will be wrapped up in direct costs because they'll be producing products, services, giving value to their customers, and it's how much costs are involved in these that will determine how much money you're going to make as a business. This is massive because there's a whole load of costs that can disappear into black holes and go everywhere, and that can have a fundamental impact on your margin. And let me give you an example. If you're turning over, let's say £1 million, and you've got a gross profit percentage of, let's say 50%, you are going to be making £500,000. Well, if you end up having a load of costs or rubbish or waste within your direct costs, and you're making a 40% margin, you may say, well, that's still good, isn't it? I've made 40%. Well, no, it's rubbish, because if you should be making 50% and you're making 40%, that's a difference of 100 grand. That's massive. Now, that's 100 grand in 1 year. If that was in perpetuity over 10-year periods, that's £1 million. How much impact would that do and change on your life? It'll be massive. So if you've got a complete control of your gross margin and how much gross profit you're making, this is going to change not just your business as well as your life. And please, before anyone jumps in, you have to provide value to your customers, because otherwise your gross profit is not going to stay around for long, but that's a separate video. What else is it known as? It's known as margin, but also contribution. So when you have all these new words and jargon that are thrown at you, because I get it, you're not financially trained, and there's nothing wrong with that. Just remember, this is all the same thing. So if anyone says gross profit, margin, or contribution, it's all the same source. Don't be frightened that people use different words interchangeably. It's all the same. Make it simple. I've got lots of clients that when I start talking even the faintest amount of numbers to them, their eyes glaze or they'll start rolling because it's just too much. And I get it, not everyone's finance orientated because we've all got our skills that we're all really good at. So if you find gross profit slightly intimidating or overwhelming, look at it as a percentage. Now the percentage is what are your direct costs divided by what is your turnover. What you would have, especially if you did management accounts, you'd normally have this percentage to make sure that you're keeping it right. No one wants to see waste in their business. Everyone wants to make as much profit, but you also need to deliver value to your customers. So make it simple. Look at your gross profit as a percentage. If you're doing that throughout the year, even better to you, because then you'll see variations that come up and spot them warning signs as they appear. Things to consider. A lot of businesses, especially over the last 5 years, have implemented Xero or QuickBooks as cloud accounting. I think both softwares are great. Now, this allows the flow of information and keep information up to date to allow you to make better decisions. Love it. Now, things to consider if you're looking at a report on your own as a business owner is make sure all the data on there is complete. The basics are, does your bank reconcile? Are your sales invoices all on there and are your purchase invoices all on there? Now, also make sure that you've done your accounting entries. These can be, have you registered closing stock and work in progress? And these are relevant for both service businesses and also product businesses as well. So make sure the things to consider are, is your opening stock posted correctly? Have you valued and posted your closing stock correctly? Because if not, you could be comparing your figures one against the other that are wrong. And who wants to make wrong decisions based on data that's not correct? So things to bear in mind when you're looking at a gross profit percentage, if you're doing it on your own, is does your bank reconcile? Are your sales invoices on there? Are your purchase invoices on there? Have all of your accruals and prepayments been posted? Have you also put in the closing stock figure or work in progress? Make sure these are complete to allow you to compare the right gross profit percentage with what you compared in the past. Don't be embarrassed. If you need help from an advisor, contact your accountant, business coach, or anyone within your team that you can help with this. It's something that when you get into regular practice and systems are formed, you will then be able to do this a lot easier.